Welcome to this webinar. It's good to have you. My name is Lee Gashomba. I'm the head of SME banking at ABC Bank. And in keeping with our promise to remain the amazingly better choice, we will be hosting a series of webinars to discuss various topical issues. And I think I'll not be exaggerating by saying that tax, and more specifically tax compliance, is a major topical issue now. At ABC, what we've done to help you with your tax compliance journey is to make it seamless and convenient for you to be able to pay your taxes. What we've gone ahead and done is to integrate with the Kenya Revenue Authority so that you can initiate payments right from your desktop and make the necessary tax obligations to KRA. In addition, what we've also done is to partner with the experts in this area. This afternoon, I'm happy to say that we have brought on board Grant Thornton, who have had many years in this field, to come and share with us some of their insights into various tax problems that we might be having in our business. But before I introduce them, I'd like to encourage you to use the chat function in case you have any questions or you need any clarifications, and we shall be attending to them at the end of this webinar. Without further ado, I'd like to welcome Mr. Samuel Moora from Grant Thornton to talk to us about who Grant Thornton is, and also to introduce their team and take us through the agenda for today. Welcome, Sam.
Thanks, Lee, and I'm glad that we have an opportunity to work very closely with ABC Bank in especially matters concerning tax. Grant Thornton is a firm which encompasses various services. Our major core business being audit, but we also have other services like human resource services. We have tax services in which I'm involved in with my team who will be making the presentation today. And we also have other advisory services which involved internal audits and the likes. We've been in this market for the last 35 years, and we are based in Nairobi, a firm with 165 staff and a few interns who are working with us, numbering to around 15. We are based in Westlands, and today, as Grant Thornton Taxation Services Limited, we are privileged to talk to you about tax matters. It has been an interesting space in the last 1 year, since April last year, when COVID was reported in this country late in March, and going forward. A lot of stimulus packages were offered by the government, though unfortunately they were reversed in 2021 when the government eventually realized that it needed to move on, COVID or no COVID. You might not be really happy with what the government is doing, but economies have been struggling. Economies are struggling globally. The effect of COVID has been actually very destructive in various economies. And if care is not taken, we've seen possibilities of economies collapsing. Our partners, INF and World Bank, has actually come to try and just safeguard us from the expensive loans we've been taking from the Chinese government. And in as much as most of us are not happy with what has been going on, we just need to realize that we either take the loans or we are taxed higher. I don't think Kenyans have a problem with paying more taxes. I've always said this in different forums, but we always have a problem with the fact that the government has not been very accountable for the loan it has been taking, or for the tax it has been collecting. So last year, April, when we had a tax amendment law that came, Tax Law Amendment Act of 2020. In June, we had Finance Act 2020, which became effective on 1st of July 2020. And then towards the end of the year, again, we had Tax Law Amendment Act number 2. So various changes were introduced into the taxation space, not to count the excise duty, which were reversed in October or revised in October 2020. Challenging times ahead for any business in Kenya, and especially April 2021, where we're expecting the first, or rather the second batch of minimum tax to be paid. The first batch being paid after being paid by batch ending companies in March. So with me today, 3 of my colleagues, John Waihenya, one of my managers, will take us through minimum tax. After John Waihenya, Lydia Mosa will come in. She'll talk about turnover tax and voluntary tax disclosure program. In other words, Amnesty. And finally, Winnie Murugi will come and talk to you about how to really have a good relationship with Kenya Revenue Authority. Currently, can carry on rampage, but I do not want just to take up what Winnie is going to share with us, but she's going to take us through how you need to engage and not to fear KRA, but whenever they send a love letter to you, what you can do, how you can consult them, how you can communicate to them and the likes. So at this juncture, I want to actually welcome John Mark Waihenya to take us through minimum tax. John, over to you.
There was some rationale behind the introduction of minimum tax in Kenya, because there are companies which are in perpetual losses, yet they continue to enjoy infrastructure that is contributed by companies which are profit-making, essential services like security, transport and other, and healthcare, education. There are so many essential services that are provided by the government, yet some companies do not contribute to the taxation or to the payment of taxes. So to avoid joyriding or maybe having some companies not paying anything, yet they are enjoying services, the government deemed it fit or saw it wise to introduce minimum tax. So minimum tax is payable by any company in Kenya as long as they are not exempt as per Income Tax Act, as long as the income does not fall under Section 5, which is employment income, Section 6A, which is residential rental income that pays taxes at a 10% regime, Section 12C, which is the turnover tax. My colleague Lydia will come and talk about the same. Under the 8th schedule, which is the capital gains tax, under the 9th schedule, which is the extractive sector. So anybody who does not fall under that under those sections or is not expressly exempted by the Income Tax Act is required to pay minimum tax. Minimum tax will be came into effect from 1st January of 2021. So any income earned or accrued after 1st January 2021 is subject to minimum tax, and it is at 1% of the gross turnover. So all sales that has been made by the company, 1% of the same. So there are various modalities on how the same will be paid. There are comparison to be done with minimum tax. I'll go through that. So there will be a comparison between minimum tax and installment tax, and how do you compare the two to know which one do you pay. There is also the treatment of the advanced tax and withholding tax credits. There will be the question, how do we treat the 12th month, as in the 12th month of the accounting period? What constitutes the gross turnover? And also, if I have taxes, I mean tax losses from previous years, or tax credits, or capital allowances that I probably have that I have losses due to capital allowances. What treatment am I supposed to treat minimum tax, and whether the minimum tax is a final tax, a prepayment, or what form of a tax is it? So some of those questions I'll be addressing them in these few minutes. So the first question is, how do you compute the minimum tax? So minimum tax is basically computed 1% of the gross turnover. In case you have any withholding tax credits, you are allowed to offset those credits against minimum tax. So for example, if you have a gross turnover of 50 million, 1% of 50 million is 500,000. In case you have withholding tax credits of 200,000, like in my example, you will pay minimum tax of 300,000. However, you are supposed to compare minimum tax with the installment tax that you have computed. Installment tax is computed based on prior year performance multiplied by, or prior year tax liability multiplied by 110%, or current year performance, whichever is lower. So if you feel your performance this year will decline, so you are allowed to compute your installment tax based on the current year. So you distribute the installment tax into 4 installments. That is the 4th month, 20th of the 4th month, 20th of the 6th month, 20th of the 9th month, and 20th of the 12th month. And in case of any balance of tax, you are allowed to pay it by that year of the 4th month after the accounting period end. That is, in case of a December ending, you are allowed to pay by April of the following year. So what constitutes gross turnover? Gross turnover means gross receipts, gross earnings, revenue, takings yield, anything that you compute as sales in your sales ledger or in your general ledger. Anything that you report as a sale is reported as a turnover, and that is where that will be the basis of the minimum tax payment. The exemptions, as I mentioned, and as per the guidelines issued by KRA, the exemptions to minimum tax, employment income, residential rental income tax, turnover tax, capital gains tax, income of extractive sector, and also income of a person who's engaged in a business whose retail price is controlled by government. In this case, it's mainly fuel whose retail price is controlled by government. And also a person who is engaged in insurance business, their income is exempt from minimum tax. Also, in case you have any withholding tax credit, as I mentioned earlier, any digital service tax that you've paid, or any advanced tax credits, that is motor vehicle advanced tax that you've paid, you are allowed to offset to reduce the minimum tax payable. The date of payments for minimum tax for a December ending, the date of payment for minimum tax will be same as installment tax. So picking an example of December ending, where installment tax is due by 20th of April. So for those of us who have December ending companies, we need to know by 20th of next week, which is Tuesday, we need to have paid either installment tax. I've highlighted earlier the basis of computing installment tax, or minimum tax. Minimum tax will take your sales for January, February, and March. Take 1%, whichever is higher, you'll be required to remit to the Commissioner of Domestic Taxes. Then the second payment will be due on 20th of June. You'll take the sales for April and May, compare with the installment tax, and pay and remit to the 20th of to KRA, whichever is higher. Then that payment will be sales for June, July, and August, which is due by 20th of September. A fourth payment will be September, October, and November, due on 20th of December. And then balance of tax, all sales for December. In case of any balance of tax that will be paid by, that is usually paid by 30th of April, which is the same date as when minimum tax for December turnover will be due. I know ABC has so many clients in agricultural sector, so I felt it right to also include the agricultural sector installment or minimum tax dates of payment. For the first payment of minimum tax for agricultural sector, we will take January to August sales and pay by 20th of September. So for agricultural, you'll wait until 20th of September to pay the first minimum tax payment, all the installment tax, whichever is higher. Then sales for September, October, and November, you'll take and pay 1% of that by 20th of December. And then December turnover, you'll pay that by 30th of April. So basically that's a summary of what minimum tax entails. And I think we will defer any questions that you may have. I have tried to summarize it as much as I can. I have tried to only give you whatever is relevant to your business and whatever is necessary for you to be aware of. So thank you. I'll defer all the questions. We'll receive all the questions at the end of the entire presentation. At this juncture, I will invite my colleague Lydia, who will take us through the turnover tax and voluntary tax disclosure program.
Thank you, John, for taking us through minimum tax. My name is Lydia, as introduced by Samuel and my colleague John. I'll be taking you through turnover tax just to have an understanding of what this is about, what the difference is between this and corporate tax, and who it's applicable to, and whether there are any exemptions to this tax. So turnover tax is a tax that was introduced in Kenya sometime in 2007. So it's been around since 2007, enacted by the Finance Act 2006. And so this is a type of tax that is charged on gross sales of business. So I know you'd want to understand what the difference is between this and what John has talked about, which is minimum tax. The main difference between this and minimum tax is that this is charged on 1% on gross turnover, and it's a final tax. And so there's exceptions to who can be qualified to account for their income taxes under turnover tax. This is applicable to persons who earn income between 1 million and 50 million. This is a recent change that was introduced by the Tax Amendment Act 2020, sometime last year. The threshold was quite lower before. It was applicable to income up to 5 million. So it's a good move made by KRA because it brings more people into the tax bracket to try and encourage taxpayers to be compliant because the tax on this is 1% on the gross turnover. And so if you have income between 1 million to 50 million, you can elect to account for your taxes under turnover tax as opposed to corporate income tax. So last year, KRA made it more attractive because initially limited liability companies were excluded from this. So now the exemptions have been reduced to persons with employment income. So if you earn employment income, you cannot now go and tell KRA, I want to pay my taxes under turnover tax. And for employment income, you would still pay your taxes under the normal PAYE on a graduated scale. And then we have rental income, which is excluded as well from turnover tax. So if you have rental income, there is a separate regime for this where you can elect to pay your taxes under monthly rental income, where your income is less than 10 million. If it's above that, then you'd have to pay corporate taxes at the resident corporate tax rate, which is 30%. And then we have management and professional services, which are also excluded from the ambit of turnover tax. So if you as a taxpayer or rather you're in the business of providing management and professional services, you cannot elect now to pay 1% of your gross sales and pay that to KRA, so that is excluded as well. And then we have income subject to final tax. This could be interest income by individuals. This is subject to final tax, or dividend income. So this is also excluded. And another thing to note is that for turnover tax, you have to account for VAT if your income has reached the taxable threshold of 5 million. So if you have an income of above 5 million in a year, then you'd have to account for VAT on your output supply. The other thing to note under turnover tax is that you do not claim any expenses to offset expenses you've incurred as you provide your services. So the expenses will not be considered. So you take your gross turnover, top line revenue, 1%, you remit that to KRA, which is due and payable every month on the 20th of the following month. Yeah, and turnover tax is a final tax. So once you account for 1% on your gross sales, you'd not be expected to pay for any further taxes by KRA, even further taxes being corporate income taxes, which is currently chargeable at 30%. So it's an attractive way to bring in as many taxpayers on board to try to encourage compliance, because of course it's a reduced rate of 1% compared to the normal 30% tax rate that we're used to. The next slide we'll be going through is the Voluntary Tax Disclosure Program. This was introduced by KRA in 2020 by the Finance Act 2020, which provided for an amnesty program known as the Voluntary Tax Disclosure Program. And so what this is effective 1st of January 2020, and all taxpayers can qualify. So if for some reason you have an undisclosed liability that you have not disclosed to KRA, you could take advantage of the program, which is expected to run for 3 years, from 2021 to 2023. And there are some perks to it, which we'll talk about when we go to the next slide. And so any taxpayer can apply for VDP unless the taxpayer is under audit or is under investigation, in the sense that the parties undergoing an audit from the KRA. And so if you're undergoing any audit, then you cannot apply to take advantage of the Voluntary Tax Disclosure Program. And so this is not something new. KRA has done this in the past to try and encourage taxpayers. Some few years back, we saw KRA extend amnesty to landlords where they hadn't paid rent. So for some period, they were allowed to declare their income without facing any penalties to that end. Sometime in 2017, we also saw an amnesty program on foreign income, which saw a lot of disclosures from taxpayers who earn income from foreign countries. And so this program ran for about 2 years, and we saw a lot of disclosures made. However, that data apparently, KRA says they lost the data once they got the disclosure details coming in. But then, in short, KRA really tries to encourage compliance. So from time to time, there's some programs that will be made available. So currently, we have the Voluntary Tax Disclosure Program running from January 2021 to the next 3 years. So to understand better how you can qualify as a taxpayer, there's a limitation to the period within which you can disclose your taxes. So we have the period covering from June 2015 to 30th of June 2020. So any disclosures or any undisclosed amounts for the period July to December 2020 will not qualify. So the essence of the program is to encourage taxpayers to disclose the principal liabilities. So in exchange, what you get is 100% remission on the applicable penalties and interest arising. And this is where you make your disclosure in the first year of the program. So if you take advantage of the program from January 2021 to December 2021 and make the full payment of the principal amount in the same year, you'll be guaranteed 100% tax remission on the applicable penalties and interest. And then we have 50% remission where you make your disclosure in the next year. So that would be 2022. So if you make your remission in 2022, you'll get just 50% remission on the penalties and interest arising. And then you get 25% where you make the disclosure in the third year. So it's highly encouraged to take advantage of the program so that you get full benefits of that, which would be 100% remission or waiver on any penalties and interest that may arise, which could be punitive. And then, so I'm sure some of you have received this letter. So this was being sent out sometime in January, where KRA was saying that they've received information and that they've reviewed, and they have information that you've not disclosed data, and they have liability, so you should take advantage of that and disclose any taxes applicable in the next 60 days. So the program allows for you to disclose your liabilities within a period of 3 years. Currently, it's supposed to be an online application that you make. However, the mechanisms for that have not been put in place. So how you go about it, you'd have to write a letter to KRA notifying them that you want to take advantage of the voluntary tax disclosure program. After that, there are some forms that you fill, including the details of the tax liability that's applicable, the taxes that you're disclosing, the periods that you're disclosing. So all this information now is done manually, as opposed to the recommended online application. So once you do that, you then receive information or communication from KRA confirming that they have approved your application and that you should now go ahead and make the payment. So this was a standard letter that the KRA was sending to all taxpayers to try and encourage them to, although it's very, when you read it, it's very fierce because of how the wordings have been placed. So it was just a letter sent out to all taxpayers to try and encourage payment of the taxes, or rather encourage uptake of the program. And then, so there's some few factors that can lead to the commissioner probably withdrawing the relief that they are potentially granted you. So this could include, in the event the commissioner has information that the material or the information that you're disclosing is not legitimate or it's not genuine, then they have a reservation. They can make a reservation and fail to grant any relief from the penalties on interest. They can also withdraw any relief granted. They can also go ahead, if they have information that whatever you're disclosing is not true, they can go ahead and assess additional liability and the demand for additional taxes, or they can commence a prosecution of an offense because of failure to disclose material facts relating to the program. That takes us to the end of the voluntary tax disclosure update and the turnover tax update. I'd like to introduce my colleague Winnie, who will take us through the KRA, how to manage your relationships with KRA. Winnie, you can take over.
So like has been mentioned, my name is Winnie. I'm also a manager in tax, and I'm going to be taking you through the various issues that taxpayers go through, and especially when we are engaging KRA. So I'm going to cover these in two focus areas: KRA audit triggers and handling and how to handle KRA when it comes to their audits that they conduct on our books. So I'll go straight to the KRA audit triggers. Now, as we have seen on papers and very many publications recently, KRA is very much present, and we can see they're very active in ensuring that they're able to capture and gather as much taxes that they can to meet the targets that they have. So one of the very common or maybe updates that we've seen in the papers recently is one we can see KRA puts tax evaders on notice. So there's been a lot of incidents where very many taxpayers are not declaring taxes as is required. So KRA is on the lookout, and this is being done through the many audits that they are going to be doing, and also revamping some of the audit functions and bringing or expanding their tax bases through some of the taxes which you've seen which have been introduced. So anyone who is not declaring their taxes, we can only say that your time is limited and KRA is actually coming to get you. Other tax updates that we can see, KRA is hiring over 2,000 officers in fighting against tax cheats. So like I mentioned, there are a lot of incidents or incidences of non-compliance. And so as to reduce this, KRA has actually revamped their team. They're hiring a lot of officers to assist in audits and verifications and to ensure that all taxpayers are actually compliant. And you can see there are so many audits which can either be through desk audits. Desk audits, we mean audits through the various return verifications through the ITAX. So with ITAX, with the introduction of ITAX and all the returns are actually filed, they're able to do through desk audits and contact the taxpayers so that they can be compliant where there are incidents of variances in the declarations. Other headlines that we've seen is KRA citizen tips in some 894 billion shillings tax drive. This is basically on whistleblowing. We have seen recently KRA has actually rolled out a lot of has rolled out a system which is basically an anonymous reporting system where taxpayers or individuals are actually given a chance to whistleblow or to report any incidents of cheating or probably taxpayers who are evading taxes. So the process is very anonymous, unlike before where individuals would be required to actually present themselves at KRA and report any incidents of tax evasion. So with this in mind, an individual is required to go through an online platform to go and report such incidents. So it's very anonymous, and they've assured that individuals that they are actually very much protected. Another very good headline is where we saw just recently in the last month that KRA has actually surpassed their collection target by close to 6.6 billion shillings. So that tells you KRA is outside there to collect taxes. So if you're not very, to collect taxes and meet their target. So it's about time as you as a taxpayer that, even if you've not been remitting your taxes, just give to Caesar what belongs to him, because eventually they'll still be able to catch up with you. So through the KRA audit triggers, so I'm going to give a general overview on what audit triggers are, and then with time I'm going to break it down to the different tax heads that we have. Some of the general audit triggers we have is one, multinational organization. It is very obvious through the intercompany transactions, and in Kenya recently we've seen a lot of MNCs setting base in Kenya. So with the intercompany transactions and the companies which are actually coming up and setting up in Kenya, this may be an audit trigger, and definitely to ensure that these companies are complying in terms of the intercompany transactions. Related company audits. So in the same way, even in Kenya, we have companies who have other sister companies. So if one company is audited, then definitely there's a likelihood of the sister company being audited. So it is always necessary that if you look at how KRA has approached one company, then ensure your sister company is also in correct books, because it is obvious through the intercompany transactions and the related party transactions which are there, then the other company will probably be audited. Another very unique audit trigger is usually through the staff. So we always talk about having employees you trust, but in the same regard, it's good that you ensure that you have employees and treat them well, because if you do not treat your employees well, they can turn against you. I talked about whistleblowing. So if you're not really treating your employees in the best of ways, then these particular employees can actually go ahead and report your incidents of non-compliance to KRA. So, and some of these employees are actually employees who hold functions like accounting and finance section. So these are people, we are not saying you should not trust them, but definitely they are people you should actually ensure that you're working in consensus with, and ensuring that you're able to comply and treated them in the best of ways. There are incidents where you have to part ways with an employee, but definitely there's a better way to do that, because like I said, with whistleblowing, they can go back and get back at you. Another audit trigger is non-filing of tax returns. So you realize there's a lot of incidents with the requirement, for example, by the banks to actually have a PIN when opening a bank account. We've seen situations where people open bank account and definitely you have to get a PIN, but you're not compliant with KRA. With the same regard, you still continue with your normal operations of businesses outside there. So again, with the non-filing of tax returns, and even with the existence of PINs, this is an audit trigger. These may make KRA to actually contact you and want to look at your information. Third-party information is another trigger, which is through exchange of information and through ITAX. ITAX, as much as we say, is a very good platform that came to ensure efficiency It is good platform, but also from the KRA side, again, KRA is using third-party information to identify incidents of non-compliance. For example, withholding tax and withholding VAT. So you may decide to withhold tax on a particular supplier, for example, but that supplier does not declare the income. So KRA will go look at the certificates, and they're going to identify this particular supplier and notice that that particular income was not declared on the other side. So that's how that party information works. Again, also through the banks and the rest of the transactions. So I'm going to break down the audit triggers to the different tax heads. We have corporation tax triggers, failure to separate source of income. Like what the law provides is that you should be able to separate sources of income and tax them separately. So if you have business income, you have interest income, for example, you also have rental income, you're supposed to separate source the particular income, because there are incidents where you have business income, which is in a loss position, but you do have rent and interest, which basically is rental income, which are still in profit. So if you have losses on the business side, then that loss should remain as such, should not be offset against the profits on this other side. So many taxpayers, because of lack of knowledge, they tend to offset the business loss against the profits in this other form of income. So that is wrong. It's always necessary that to ensure that you separate the same. Reporting of perpetual losses. Again, we are not trying to say that there's a problem with this, but definitely, I know in Kenya, the law is to transfer losses for a period of 10 years. But again, looking at some of the losses that are there can be well attributable to the nature of business. If you have heavy investment at the start of the business, then this is likely to continue. But for some of them, you realize the nature of the business is one that is likely to be generating profit, but still you're just continually reporting losses. KRA will definitely have an issue. And we've actually seen a year, if I'm not wrong, mistaken, last year, they sent a lot of letters to everyone who was reporting continuous losses without actually being able to support. And, looking at the nature of business, is a person who is supposed to be making profit. There's no profit. There's no problem if you can support your losses, but definitely that is a trigger if you're actually reporting continuous losses. Variances in income, that is VAT returns and financial statements. This is another very obvious check that KRA does. As long as you're registered for VAT and you file your VAT returns every month, it is always necessary that you ensure that your ledgers or your books match with the declarations you're giving KRA. Because if you give KRA declarations which do not match with the books, there'll always be a difference. And I'll give an example where VAT returns could be higher. Your income as per VAT returns could be higher than what you've reported in the financial statements. Then that means you've underdeclared your income for corporation tax purposes, and definitely KRA will come for the 30% and vice versa. So it's always good that you check this. We advise a month-to-month kind of a reconciliation so that by the time your auditor is coming at the end of the year, these kind of reconciliations are done and you're good to go. So expenses without matching income, again, we've seen in line with losses, we've seen individuals who do not report any income at all, but still want to claim expenses. If you're going to claim any expenses, then there needs to be a corresponding income, because every income must have a corresponding expense. So if you do not respond, you do not recognize any income, but you do have heavy expenses, then this is also a trigger, and KRA may come to verify what is your nature of business. Another trigger is profit margin versus industry average. We've seen a lot of situations with our experience as Grant Thornton, where KRA is doing a lot of industry audits. The most recent one we had is the tourism sector, and we could see different types of individuals. Some of them are reporting income and some are not. Well, even it is expected with them to do so. So again, always ensure as you do your books, there's some of the margins that you're able to check, because this is also a trigger that KRA also looked at. Unexpected loss in the returns, these I talked about in line with the perpetual losses. Winding up, if you choose to close the company and you have to cancel your PIN with the KRA will always do an audit on you. This is not to discourage you to just leave the PIN hanging. Definitely, if you leave a PIN hanging, you'll always have the liability of filing returns, and we know filing returns comes with a penalty. So if you've stopped operations, it's always good to go through KRA. However, even when we go through the KRA to stop this process, an audit must be done, because KRA wants to be sure if we are cancelling your PIN, then are you compliant, or were you compliant in terms of your taxes for the time that you're operating. So before you get to that step of engaging KRA to wind up, It's good that you ensure your books are clean. And if you realize any incident of undisclosed liabilities, then at that moment you can do a voluntary disclosure. Publicity is another corporate audit, corporation tax audit trigger. Well, as much as we say advertising is good for the business, we saw incidents where KRA could actually spot a lot of advertising. And you see right now, advertising is very rampant in Kenya through social media, through the billboards. Every road you go to, you can see a billboard for a certain business. Publicity is good, but we've seen situations where KRA is able to pick a client or a taxpayer for audit purposes through such advertisements. So yes, it's good. You may decide to go big on advertising, but also ensure on the flip side, you're also complying. I'll go direct to the PAYE audit triggers. Just like VAT, for pay as you earn, you need to ensure that your salary matches your payee returns. Payee returns are filed every month. So you need to ensure that the pay as you earn you're paying on the salaries that you declare is the same as what is the same with the salary figure that you claim in the audited accounts. Because salary, being an expense, when you're doing your audited books, we've seen situations where people try to inflate the salary figures in the books, in the financial statements and ledgers. But when you go to pay as you earn, the returns filed monthly, the payee is very low. So there is inconsistency. That inconsistency, KRA will always have a trigger and will contact you for an audit. And then PAYE not paid in time, which also goes in line with the next slide, which is fluctuation in pay as you earn. So definitely you might think you're filing returns, but there's no one at KRA who is actually looking at what is happening. But believe it or not, someone is always monitoring. And one of the most unique things that we've seen KRA do is monitor the fluctuations in pay as you earn. Because if in 1 month you're paying 100,000, let's say 100,000 pay as you earn, then the next month you go down to 20, then the next month it goes up again or goes down. Those fluctuations, KRA will want to understand what business are you running? Are you always bringing employees and getting rid of them? Are you even declaring the correct PAYE? So that is another pay as you earn trigger. And then also directors' fees vis-a-vis standard of living. They also do some, audits on the director. One thing you also need to understand, if KRA does an audit on a company, they must extend this on the directors. This we have seen. So as a director of the company, always ensure that you as a director, you have also proper books and your income also is well reported. Because we do have companies who pay directors some money. We also have incidents of directors drawing money from the company. If a director definitely draws money from the company, either accountant or an accountant, then there's a tax implication, pay as you earn or otherwise. So, like I mentioned, directors also need to be very cautious of these, to always ensure that they're running the companies independently. So VAT audit triggers, again, the variances in the VAT returns and accounts must match, and then consistent refund position. Just like losses, if you're in a consistent credit position, and this maybe is not in line with the business, with the nature of business, KRA will always have an issue. And we saw a year where KRA sent so many letters questioning the credibility of some of these VAT credits. So always ensure, one, for VAT purposes, you have the correct allocation or in terms of the rate of taxes, so that you ensure that you're carrying forward the correct credits. Third-party information, again, like I mentioned, through withholding VAT and ITAX, sales inconsistencies. These we've seen through the VAs. If you're in business and you've been filing your VAT returns, I'm sure you've received the inconsistencies in the VA. So this is something that KRA was very, very good at, and we were able to nab quite a number of taxpayers who were not declaring income. Again, VAT refund claims. In Kenya, you can only claim refund on 3 situations, either because you're dealing with zero-rated sales, you have paid tax in error, and maybe VAT on bad debts. So again, we always say, if you're going to claim a refund, ensure your books are correct. You cannot go to claim a refund and when on the other side, you have a lot of undisclosed tax liabilities. Your refund will definitely cover all that, and maybe KRA can get more. So before you claim a refund, ensure that your books are actually correct. And also, another VAT trigger is the fact that some people are very inconsistent when it comes to filing returns, such that they always file their returns late. So I'll move to how to manage KRA audits. What do you do when KRA catches up with you and then they have given you an audit letter. What is the process? What happens? Now, I'll cover this in 3 sections. Before you receive, definitely immediately you receive a letter, that is before starting an audit, during the audit, and after the audit. How do you handle this process? Now, before the audit, immediately you receive an audit letter. Do not rush to, in panic to KRA or want to provide the information as stated in the letter. It's always necessary to read the letter if they've given you a letter. And the first thing you need to do is always involve a tax consultant who is going to analyze your systems. Okay. The next step is to obtain an official a letter from KRA with the required information. We've seen instances where someone just tells you, send me information. Before you even disclose any information, and the law is clear, before an audit is done, this has to be officially communicated. So ensure you have a letter of audit. So involve a tax consultant, because we've seen people who rush to KRA, but you end up reporting yourself. So it's like taking yourself to the police and exposing yourself at that moment. So if you do not know how to react, just involve a tax consultant. We always have, with the experience that we have, we can assist you on how to handle the process. So ensure you have all the relevant information, because definitely in the audit letter, KRA will have listed the items that they may need. Ensure you have all that information in place, and then agree with KRA on a time frame. Do not act immediately like they say. I know they say, well, you have to act because they'll tell you, give us this information within 7 days. As a taxpayer, you still have the right to request for extension of time. You do not have to act within the 7 days. This could have just caught you. You just received a letter from KRA. You do not know what to do. You're confused. And the first thing at least you need to do, agree with timeline in KRA. Tell them, give me an extension of time to provide this information. And from experience, we've not had a situation where KRA has rejected a request for extension of time. And then definitely inform the staff to avoid any surprises. This is basically the staff involved, or the staff who are going to be basically assisting in the audit. This is basically the finance and accounting function. What do you do during the audit? Before every audit is conducted, there's usually an opening meeting. We've seen, and from experience, we've seen situations where our clients have gone directly to KRA without without a tax consultant, and that opening meeting becomes a problem. So just within that opening meeting, you've already exposed yourself a lot. So do not attend any meeting without a tax advisor or a tax consultant. We always say you may decide to give a lot of information, but one information leads to another. So the best thing is involve your tax consultant. They know what information to give at what level. So do not go alone. Again, like I said, from experience, we've seen a lot of taxpayers who've actually exposed themselves even during the first day, and KRA will always carry on that as they move on the audit. Okay, the other option is ensure that you appoint one contact person to avoid many people who are dealing with KRA. So if this audit is going to be carried at your premises, ensure that you have a contact person, not anyone in the office, because we've seen situations where, again, one person may expose the company. For example, if you're dealing in a manufacturing company and an auditor or KRA auditor has come to audit, investment allowance, and you know very, very well you made a mistake and you claim investment allowance then when it was 100% in a year which you are not supposed to claim. And then you let this particular KRA auditor go and do the field verification at the factory, and there they go and find a manager in charge of the machines. So the engineers' machine levels, they know about the operations of the machine, but they do not know about the implication of claiming an allowance at a particular time. So you go and ask them, then when was this machine installed? When did it start? And that particular engineer will actually tell them, we just started now. And probably you're in 2020 and the ID was claimed in 2019. KRA will automatically want to disallow. So it's always good, appoint that person who understands the tax perspective of it, and who is able to give information, but only relevant information, not just anyone. So be cooperative. Again, do not be a person who listens to KRA and cooperate with them, because definitely leniency is a case for prosecution. And be a person who is able to listen to KRA, and then avoid questions which are going to put you on the spot. After the audit, what is the process? What should you do after the audit? So after the audit has been concluded and they've given you the findings, sorry about that, they've given you the findings and now you have to pay the tax. Always ensure KRA gives you an official letter which is confirming the final position. Do not just let it go. How you decide to end the audit, if there is any tax payable, ensure that the tax is paid, and also ensure KRA issues you with a letter confirming the position agreed upon. So we've seen situations where an audit is concluded, whatever tax is agreed upon is paid, but there is no letter showing conclusion of an audit. That is very dangerous because that would still keep it open for another auditor, for another KRA person to come and audit the same thing. Well, you know, if you have a letter and someone comes and wants to audit the same period, you can show them and tell them, look, I was audited and these are the findings, and even these are the taxes that they paid. So you can object to any taxes which you are in dispute. If you have any taxes, then KRA has issued you with a demand or an assessment, object to taxes which you not agreed to. Again, at this level, involve a tax consultant because there are so many, there are stipulated timelines that taxpayers are not aware of as per the law, which involve objecting to taxes which are in dispute and going forward the appeal process. So please, this is a situation, this is a scenario we've seen with a lot of taxpayers. They fail to involve a tax consultant who is going to advise them, and failure to observe some of these timelines, which also includes paying the taxes which are required. What does it mean to lodge a valid objection? If this is done, then it puts the taxpayer at a very bad situation, which they may end up losing the case. So it's good to involve a tax consultant who is going to assist you with that. Apply for waiver of penalties. Like I said, if you have been audited and there's an assessed tax, definitely there are penalties and interests which are going to be imposed. As a taxpayer, you have the right to apply for waiver of the penalties and interest, and KRA, the commissioner, will have the right to actually give you this waiver, either 100% or an agreed upon rate. So with that, I've finished my presentation. We shall go to the Q&A session as conducted by John. Thank you.
Thank you, Winnie, for the good presentation. We'll go straight to the Q&A. There are a few questions which have been dropped under the Dropbox. The first one is about minimum tax. If you're subject to withholding tax, do you still pay the 1% minimum tax? I explained this before. I think this question was asked before I explained that the withholding tax credits and the motor vehicle advance credits are adjusted against the minimum tax payable. So they are used as a credit. So maybe your income is subject to withholding tax and your clients don't deduct withholding tax. That does not exempt you. But if you have withholding tax credits in your iTax ledger, that way you do not have to pay minimum tax to the extent that the withholding tax has been withheld. Then there is a question: who are eligible for minimum tax? And I explain every taxpayer, be it a company, be it an individual, everybody who is in business, except few exemptions that I gave, those people who are in employment, those people whose income is subject to turnover tax, or those people who pay turnover tax, those people who pay monthly residential rental income tax, those people whose income is subject to capital gain tax, those people whose income is from extractive, and those people whose income is whose pricing is regulated by the government, that is mainly fuel, and then insurance business. Those are the people who are not eligible. But partnership, businesses, companies, all form of businesses, as long as you are in a business to generate income, you are supposed to be at the minimum tax regime. For partnership, maybe I can just mention that the responsibility of paying income tax is with the partners. So in that case, the partners are supposed to pay the minimum tax based on their partnership sharing ratio. Then there is a question on TOT. Is there a chance of TOT being raised in the future? That one, maybe Lydia can just address the two TOT issue. On same note, if after end of accounting period the company is at a loss position, how do we treat the minimum tax? Minimum tax would be a sunk cost unless you're able to utilize it. So if you're in loss, then the minimum tax will be a sunk cost for business. So you won't be able to claim a refund on it. That's the position. Minimum tax is like a form of a tax that you pay. It's not a credit that you have with KRA. So Lydia, you can.
So we have a question on turnover tax, and the first one is on the procedure. So if a taxpayer has not been accounting, what's that? Yeah, if a company has not been paying turnover tax and wishes to revert to turnover tax, what is the procedure? So it's made quite easy. It's an online application that you make. So you have to amend your PIN details and make the application online. By online, we mean iTax. So once that is done, KRA will receive the application that you have made. And then if everything is well from their side, that they have reviewed and you are not under the companies or taxpayers that are exempt or excluded from the turnover tax regime, then they would approve your application, and you'd then automatically now have to account for the turnover tax by 20th of the following month. So that's quite, it's made on iTax. It's pretty straightforward, amending your PIN details to change from the current regime, which I would assume is the corporate tax at 30%. And then once you amend the details, your application would be approved once KRA has vetted to ensure that you're not taxpayer that's excluded as under the turnover tax regime. And then we have another question on voluntary. If one voluntarily discloses unpaid taxes, could this adversely affect their standing as a taxpayer in future? So, so from practice, we've not seen KRA from the programs that they've published in the past. So we talked about the landlords, landladies waiver of rental income. We also talked about the amnesty that was provided, and I mean for foreign income. So we've not seen KRA penalize taxpayers for non-compliance from the applications, or rather this disclosure that was made then. But truth of the matter is KRA is still collecting data. So if they are to do an audit in future, probably they would start with the companies that disclosed that, oh, this is still missing. But then it would not really affect your good standing. You'd still get your TCCs. It doesn't affect your operations as a company. From practice, we've not seen KRA penalize taxpayers for disclosing unpaid taxes. Some of this is because laws are changing every now and again. You probably don't have an in-house tax consultant, so some of these things you do not get an update of this when it happens. So it's not a voluntary non-compliance kind of a thing. It's possibly because of the risk. The laws are changing every now and again. So because of that, you could find yourself in a situation where you're not up to date with your taxes. So it's not a reason for them to be, to cause a taxpayer not to be in good standing with KRA. And then we have a last question on turnover tax as well. We'll take that, and then John, I'll pass it over to John to finalize on the minimum tax questions. So the question is whether there's a chance of TOT being raised in the future. I would assume this is because it was introduced when the corporate tax rate was reduced to 25, and then we saw that increase being made, reverting to the normal 30%. So KRA is really trying to expand the tax base to just and try and encourage. Turnover tax was seen as a tax for the Jua Kali sector, if I could use that word, to try onboard as many people as possible into the tax bracket. So now this has been expanded to limited liability companies. So with this, it would encourage more people to try to be more compliant. So it's possible it could be raised, but not currently. Of course, if that happens, we will definitely update you through ABC Bank. But at the moment, there's no indication that that is going to be increased to. I know the previous rate was 3%, which was reduced to 1% last year. That would be that, and then I'll pass it over to John to just go through the minimum tax queries that have been posted. There's one last question on, please clarify on turnover tax. Is it applicable to corporate taxpayers or is it individual? So turnover tax, there's a few exceptions. It's applicable to majorly all taxpayers except a few who we mentioned before. So if you are eligible to account for employment income, you'd be excluded from the turnover tax regime. If your income is subject to final withholding tax, this could be interest paid to individuals, it could be dividend income, you'd not be qualified to pay your taxes under turnover tax regime. There's also exceptions to income arising from management and professional services. Other than that, it's applicable to all taxpayers as long as you don't fall under those exceptions that we mentioned before. So it would be applicable to corporate taxpayers. This is hand in hand with what previous attendee had asked. If you're in the corporate tax regime, you can elect to transfer to the turnover tax regime as long as you you do not meet the exceptions that have been discussed earlier. John, over to you.
I'll go through other questions because I can see a number of other questions which have been asked. How does KRA assess taxes on rentals? If I were to disclose some rental income, will they assume all houses were occupied? This is basically a question on KRA audit, so I'll let Winnie answer that. How do you generate the payment slip for minimum tax? There is a minimum tax tab at the iTax where you just go through the payment registration, income tax company. Then there are usually 3 options at the minimum tax company: self-assessment, advance payment, installment tax. Now there is a 4th one, which is the minimum tax. So it's just the way you generate installment tax, but instead of picking installment tax, you pick minimum tax. Then does insurance brokers have to pay minimum tax? Yes, because as we said, the only income that Samuel has already answered that it's only insurance company who are exempted. But maybe you just need to look at it from the point of view of withholding tax, because the insurance brokers commission is subject to withholding tax. So I've not seen any of our clients who is an insurance broker and has paid minimum tax, for the simple reason they have sufficient withholding tax credit, not because they are exempt. They are not exempt, but the withholding tax credits caution them. I think basically that's what I need to cover, but I can see there is a questions here I didn't. What happens if at the end of the accounting period the tax liability is less than the minimum tax? This is a similar question to the one that when you're in a loss position. The motive of the government when they introduce minimum tax is to ensure each and every business or taxpayer contributes at least 1% of their gross turnover to the exchequer. So as long as whatever you paid is not more than 1%, if it's less than 1% or equal to 1%, then you are not getting a refund, you don't have a credit, that's it. But in case it's more than 1%, then that's the only time you have a credit that you are allowed to seek a refund as per provisions of Section 47 of the Tax Procedures Act. So Awarao, we need to answer the question on how does KRA assess taxes on rentals. If I were to disclose some rental income, will they assume all houses were occupied? I believe we have addressed all other questions.
Okay, thank you, John. So how does KRA assess taxes on rentals? If I were to disclose some rental income, will they assume all houses were occupied? So I want to assume, yes, these are the residential houses. With rental income, we have the monthly rental income tax returns, which are meant to be filed every month. So in Kenya, we operate a self-assessment tax regime where you disclose you self-declare the rental, the income which you've received. So for MRI, which is the monthly rental income tax return, this one is only payable on income received. So this is on the assumption that it is on the particular houses which have been occupied. So at that moment, then if should KRA want to come and audit, it's for you to actually prove that these particular houses, if I did not declare income of these particular houses, you need to prove that these particular houses then were vacant or no one was occupying. So how to declare, like I said, you just basically need to file your monthly rental income tax return, declare the income basically only on houses which have been occupied. And yeah, that is it. You just need to ensure that you're compliant with that. And just to catch on this, a check that we saw KRA do on third-party information, just to ensure that they bring everyone on board when it comes to rental income. We saw KRA looking at incidents of electricity bill, who is actually the owner of the electricity bill account, and water. So some of these things are the third-party information that KRA use to capture taxpayers who are not compliant when it comes to rental income. Thank you.
Allow me to just add to what Winnie is saying. KRA does not assume that your houses are occupied. The declaration on payment of monthly rental income is purely a self-assessment. The only issue is, as long as the house is occupied, you need to pay MRI. And if in case you are receiving rent in advance, there are tenants who pay like 3 months in advance. You need to pay MRI at that point where you have received the rent in advance. And then the next 2 months, I'm assuming it is paid on a quarterly basis, then you need to declare nil returns. So whether you receive the rent or not, another option, somebody has stayed in your house, but he or she has not paid in time, KRA is entitled to demand monthly rental income from you as a landlord or as a landlady. John?
Thank you, Samuel. I can see there is a question as tax expert. How can you help small businesses to comply with tax, especially where owners do not understand the rigorous tax requirement? Newton has already shared the email of our partner, Mr. Samuel Maura, so you can reach him on samuel.maura@ke.gt.com. As well, you can reach each one of us. I had projected a screen with all our contacts. Then there is an overlap between turnover and minimum tax. Please clarify. For minimum tax, it's only applicable to businesses. It's applicable to businesses whose turnover is more than 50 million, but installment tax is less than 1% of the gross turnover. I think that's basically, that's how minimum tax operates. It's more of an alternative to installment tax. But for turnover tax, the same is final, and it's applicable to companies or individuals whose income is less than 50 million turnover. I can see, does this mean that companies with less than 50 million turnover will pay both minimum tax and turnover tax? No, if you are less than 50 million turnover and you have opted to be registered for turnover tax, you'll only be applicable to turnover tax at 1%, and it's final tax. For minimum tax, the same is not a final tax. It's just some sort of a prepayment, but up to the point that it's less than the 1% gross turnover. I hope it's clear. In case it's not, I think you can reach to either of us through the contact shared or through samuel.mora@ke.gt.com. I don't think there is any other question. Yeah. So I think I'll take it back to Lee. Thank you for being a wonderful audience, and we will continue interacting whenever ABC Bank gives us an opportunity. And also, as we have shared our contacts, you can as well make a point and reach out to us. Thank you.
Thank you very much, Grant Thornton, for that insightful presentation on the various tax issues. For those attendees who joined us at a later stage, my name is Lee Kashomba from ABC Bank. Thank you so much, John, for sharing with us on minimum tax. I think you've captured very well what minimum tax is and what it is not. Thank you, Lydia, also for taking us through turnover tax and creating for us a distinction in our minds on what turnover tax is and what minimum tax is. Thank you also for covering the voluntary tax disclosure program. I think it was good to hear that it is possible to get money out of KRA. Thank you, Winnie, also for giving us a good brief on how to engage with KRA, and then also how to manage KRA once they are on site in our businesses. For our customers who want to accelerate their journey towards tax compliance, feel free to reach out to us on your contacts. For the attendees who are yet to become members of our ABC Bank family, feel free to email us on talktous@abcthebank. That is talk2us@abcthebank.com, or you can even give us a call on 0701 700 700. Thank you so much, Samuel, for organizing this. We have left, I would say, quite engaged and quite educated on this subject. Finally, to our attendees, thank you so much for taking the time to be part of this webinar. We don't take your presence for granted at all. Mine is to wish you all a great evening ahead and a positive time being tax compliant. Thank you very much.